Hello and welcome to the Essential Property Podcast with your hosts, Paul Samuda and Amanda Woodward. With 45 years of combined experience in the world of property buying, selling, investing and developing, they are here to share with you their knowledge in the Stoke-on-Trent, Newcastle-under-Lyme and Crewe property market. Let's get started.
Hello and welcome to another episode of the Essential Property Podcast with your host Amanda Woodward and Paul Samuda. In today's digital episode, we have researched the impact of the American election and how a Donald Trump victory impacts the UK property market. Now, the global markets are closely linked and we've spent hours looking at the data, the positive and the negative impacts so you don't have to. Listen to this episode to ensure that you can be ready for both the opportunities and threats in the coming months and year ahead. We hope you enjoy this episode. Let's check it out.
All right, so UK property investment. You're thinking, what does Trump winning in the US have to do with me over here?
It's a great question a lot of people are asking.
But we're going to deep dive into exactly that, how those policies might ripple out.
Ripple effect, yeah.
And affect the UK economy and specifically what it means for property investors like you.
For sure.
We're going to break it down into 3 time frames.
Right.
Short term, 1 to 2 years.
Okay.
Medium term, about 4 to 5 years out. And then the long view all the way out to 10 years.
Buckle up.
Buckle up, exactly.
It's going to be a wild ride.
It is fascinating to see how those seemingly distant events can have such a lasting impact, especially,
Especially...
we're going to factor in UK politics.
Yeah.
Oh, and Brexit, of course.
Brexit, always a curveball.
Always adding another layer to this.
For sure.
So immediate reactions, short-term impacts the next year or two.
Right.
One thing that jumped out from the research is market volatility following U.S. elections.
Oh, absolutely. Yeah. Historically,
There's always a reaction in the markets when a new U.S. president takes office, especially someone like Trump, right?
Someone who, shakes things up.
Shakes things up.
A little bit.
So investors get a little, skittish. A flight to safety is what they call it. They pull back from assets that are perceived as riskier, like stocks.
Right.
And they move towards things like gold and government bonds.
Oh, okay.
Because those are seen as safer...
Safe havens.
Safe havens, yeah, exactly, during those uncertain times.
So that means we could see some fluctuations in the FTSE 100 and FTSE 250.
Potentially, yeah.
Those are the UK's main stock indexes.
Oh, right, yeah.
In case you needed a refresher.
Yep.
And potentially even some swings in the value of the pound.
Absolutely.
So we're talking stocks, we're talking currencies, but what about real estate?
Right.
What about bricks and mortar?
Yeah, how does property react in these situations?
Yeah.
Well, this is where it gets interesting, right?
Because real estate tends to be more resilient during those periods.
Really?
Oh, yeah. It's seen as a tangible asset, something concrete.
Okay.
And, property markets, they just tend to move a bit slower than the stock market, you know? So it's not as knee-jerk.
So this volatility, could it actually be an opportunity?
Oh, it could be a huge opportunity.
If you're savvy.
If you're savvy, right. If you've got a solid long-term strategy, you're not afraid of a little short-term fluctuation.
Yeah.
You could find yourself in a really good position to buy.
So everyone else is freaking out.
Panicking.
Maybe there's a chance to get a deal.
Exactly. Think of it like this.
Yeah.
If those stock market swings spook some property sellers, they might be more willing to accept a lower price.
Just to get out.
A quick sale.
Yeah. Market volatility. Okay.
Yeah.
What else should we be watching out for?
In this short-term time frame, trade and economic growth. Oh, of course.
Always key factors to consider.
Big ones.
And Trump's America First policies,
Yeah.
Those have the potential to really disrupt global trade.
Right.
Which could be, especially significant for the UK.
Oh, huge. Especially post-Brexit.
Post-Brexit, exactly.
Yeah, another layer.
Right.
So the UK was already figuring out a whole new trade landscape after leaving the EU.
Right.
What kind of impact are we talking about?
Okay, so if those protectionist policies, lead to new trade barriers, that could slow down UK exports.
Okay.
Which then has a ripple effect on GDP growth.
Right.
The whole country's economic growth.
It's all connected.
It's all connected.
What about, so we've got this potential slowdown.
Yeah.
But didn't Labor just announce a new budget?
They did, yeah.
Could that help offset some of that turbulence?
So Labor's budget, it signaled a shift towards more what we call expansive fiscal policies.
I think increased government spending on things like infrastructure, social programs.
Right.
And that type of spending can really stimulate economic activity.
Okay.
And potentially kind of cushion the impact of a slowdown.
So the balancing act, right?
It is.
Boost the economy on the one hand.
Right.
Potentially increase government debt on the other.
Exactly.
And how does that then play into interest rates?
The big question.
The big one.
Because if the government borrows more money,
right,
it can drive up interest rates.
Okay.
And rising interest rates make it more expensive for people to get mortgages.
Right.
Which could then cool down
It's just certain parts.
certain segments of the property market.
Okay. So we've got market jitters.
Right.
We've got potential trade disruptions.
Yeah.
We've got a new budget that could, who knows, help or complicate things.
Absolutely.
Anything else in this
short time frame?
short term?
Yeah, well, it's worth paying attention to the specific sectors that might be most vulnerable to those trade disruptions.
Okay.
Right. For example, if Trump's policies lead to changes in manufacturing agriculture,
Oh, boy.
those changes could have a domino effect on related industries in the UK,
Right.
which then could affect property values.
So it's not just the big picture.
It's not just the big picture.
What's the nuances?
It's the nuances, exactly.
How those changes play out
Exactly.
on a regional level.
Regional level, yeah.
Yeah, okay.
And it's not just reacting to what's already happened.
What's coming next?
What's coming next? What potential government interventions should investors be watching for?
Right. So the UK government might actually implement measures to
They might try and
highlight
the economy.
Yeah, support industries
Yeah.
impacted by those disruptions.
Right.
And those interventions could range from tax breaks to direct financial assistance.
So for an investor,
Yeah.
those could be opportunities.
Huge opportunities if you're paying attention. Okay, so we've got market jitters, trade disruptions, government policies.
Yeah.
This is a lot.
It is.
We've got to watch it all.
But it gets even more interesting
Okay.
when we start talking about the medium term.
Okay, the medium term, so that 4 to 5 year horizon.
If 4 to 5 year horizon, exactly.
Right.
We're talking about the potential for a domino effect.
Oh, okay.
To really play out. Yeah, let's see how these short-term tremors could really ripple out over the next few years.
Okay.
One of the biggest things to watch
Yeah.
is how those policies, Trump's policies, could influence interest rates.
Okay, interest rates.
Not just in the U.S., but globally.
Yeah. I know interest rates are a big deal
They are.
for investors, but can we just remind ourselves why they matter so much in the property market?
Think of interest rates like the volume knob on the property market.
Okay.
When rates are low, it's like turning up the volume.
Okay.
Borrowing money is cheaper.
Right.
People have more buying power. And that can really drive up property prices.
Right.
But then when rates go up, it's like turning the volume down.
Mm-hmm.
Mortgages get more expensive.
Right.
Buyers have less purchasing power.
Yeah.
So that can put downward pressure on prices.
So it's all about affordability.
Affordability.
Higher interest rates.
Yep.
Higher monthly payments.
Uh-huh.
So that could price some buyers right out of the market.
And this is where that domino effect comes in.
Okay, domino effect. Here it is.
So if the U.S. economy, let's say it heats up.
Yeah, under these policies.
Under those policies.
Right.
The Federal Reserve, that's the U.S. central bank.
Right.
They might raise interest rates to try to keep inflation under control.
Okay, so the U.S. raises rates.
Right.
What did that have to do with the U.K.?
Well, see, global markets, they're all interconnected.
Right. It's all one big system.
It is.
Yeah.
So if U.S. interest rates go up,
yeah,
it can put pressure on other countries, including the U.K., to raise their rates as well.
Okay, why is that?
Because investors, right, they're always looking for the best return.
The best deal.
On their money.
Right.
So if they can get higher interest rates over in the U.S., they might pull their money out of the U.K.
Oh, I see.
Which would weaken the pound.
Right.
And then make it even harder for the U.K. to keep inflation under control.
So the Bank of England, which is the U.K.'s central bank, might have to raise rates.
They might.
Just to keep up with the U.S.
You got to stay competitive, right?
Right. Keep those investors happy.
Keep those investors happy.
And this brings us back to property.
It always comes back to property.
So rising interest rates in the UK, higher mortgage costs, that cools the market down.
It can cool it down.
Especially at the higher end.
Especially higher price segments.
Yeah.
And the buy-to-let market.
Buy-to-let.
That's where investors buy properties to rent them out.
Right.
So if your mortgage costs go up, those rental yields, the return on your investment might not look so attractive anymore.
Yeah, that's a good point.
But then labor's budget comes back into play.
Right, labor's budget.
Remember.
Yeah.
Social and affordable housing.
Yeah, that was a big part of it.
If they actually push forward with those plans,
right,
it could create opportunities for investors who are interested in a different type of market.
Interesting. So even within the property market itself, there's different things going on.
Always different dynamic.
Okay, let's play this out.
Yeah.
Instead of a boom.
Right.
Trump's policies lead to a global slowdown.
A global slowdown. Okay.
What happens to those big spending plans in labor's budget?
That's the million-dollar question, isn't it?
Yeah.
A global slowdown would really put a strain on any government's budget.
Of course.
Especially one that's already planning to increase spending.
Right.
So it could mean some tough choices.
Yeah.
You know, which programs to prioritize, which ones to cut back on.
Tough decisions.
Tough decisions.
So for property investors,
yeah,
what does that actually mean? What should we be watching for?
Keep an eye on any potential tax adjustments related to property.
Property taxes, okay.
Governments facing a budget squeeze.
Right.
They often look for ways to increase revenue. And property taxes, they can be a tempting target.
Okay. So things like capital gains tax.
Yeah.
The tax you pay when you sell a property.
For a profit.
For a profit, right. Or stamp duty.
Stamp duty when you buy a property.
When you buy, those could be on the chopping block.
They could.
So changes to those taxes, that could really impact.
It could.
An investment strategy.
Absolutely.
Okay, so stay informed on the tax front.
Stay informed.
Got it.
Another layer to consider.
Yeah.
Those global investment flows.
Oh, right.
Remember we talked about shifts in U.S. policy, economic slowdowns.
Yeah.
All those things can influence where investors around the world choose to put their money.
Right. It's like a big game of financial musical chairs.
Exactly.
So less investment coming into the UK. Is that what we're talking about?
It's a possibility, yeah. If the U.S. becomes less attractive.
To foreign investors.
To foreign investors. Yep. Or if investors think the U.K. is just too risky.
In a slowing global economy.
The slowing global economy, yeah.
We could see a decrease.
We could.
In investment in UK property.
Potentially.
But wait, couldn't that also create some opportunities?
Oh, now you're thinking like a true investor.
Okay.
Right. So if those big institutional investors, they pull back, doesn't that create some space?
Yeah.
For smaller investors.
Smaller investors.
So maybe step in.
And scoop up some bargains.
Scoop up some bargains, yeah.
Okay.
So it's all about perspective, right?
Yeah.
When the market dynamics shift, it inevitably creates challenges.
Yeah.
But it also creates opportunities.
Opportunities. It's two sides.
It is.
Of the same coin.
Yeah, exactly. Those who adapt.
Those who adapt and see those opportunities. They're going to be the ones who come out ahead.
Okay, so it's not doom and gloom.
No, not at all.
It's more like a reshuffling.
A reshuffling, yeah.
A new set of winners and losers.
Exactly.
Okay, so the medium-term outlook, UK property market, it's all about navigating that uncertainty, being adaptable, understanding
how those global trends really translate into local impacts.
Local impacts, got it.
Got it.
Adaptability is key.
It is.
Okay, let's take a deep breath.
All right.
Jump into the long term.
The long term?
The 10-year horizon.
10 years out.
I'm both excited and a little terrified to see.
I know, it's a lot.
What happens?
It is. Thinking long term, this is where we can really stretch our imagination.
Right, because it's not just about predicting the future.
No.
It's about understanding the potential scenarios.
Exactly.
And positioning ourselves to thrive.
Thrive, yeah. No matter what happens.
No matter what.
Okay,
so let's imagine a world 10 years from now.
10 years.
Where those protectionist policies that we talked about have actually led to a more fragmented global economy.
Okay, I'm picturing more trade barriers, less international cooperation, maybe even some regional blocks forming.
Yeah, yeah.
A shift away from globalization.
And that's a real possibility, yeah.
As we know it.
But remember, even in a more fragmented world, trade and investment don't disappear.
No.
They adapt.
They adapt. Okay, so the UK might have to diversify. Its economic relationships.
Exactly.
What does that mean for property investors?
Well,
should we be looking beyond London.
Beyond London, yeah.
Those traditional hotspots.
It's a smart question.
Okay.
Because diversifying geographically becomes even more important in a world where the economic landscape is shifting.
Okay, so secondary cities.
Secondary cities.
Ones with strong local economies.
Right.
Potential for growth.
That might not be as reliant on global trade flows.
Okay, so looking beyond...
Beyond the usual suspects.
The usual suspects, yeah.
Okay.
Different types of properties.
Yes.
Are we still talking about traditional buy-to-let?
Right.
Or is this a time to consider...
To consider alternatives.
Alternatives, yeah.
This is where understanding those structural shifts in the economy is crucial. Because if certain industries are declining while others are emerging, it's going to change the demand.
For different types of real estate.
Exactly. Right. Student accommodation, for example.
Okay, student accommodation.
Could see steady growth if the UK attracts more international students.
Because of these new trade relationships?
Because of those new relationships, right?
Interesting.
Yeah.
What about, the aging population?
Yeah. Yes.
I know Labor was focusing on that.
They were.
In their budget?
Absolutely.
More senior housing.
Senior housing, yeah.
Retirement communities. That's a trend.
That's a trend that's only going to accelerate.
That's not going away.
No matter what happens politically.
Right.
And it's a huge opportunity.
For investors.
We're thinking long term.
Huge opportunity, okay?
Yeah.
So even in a more fragmented global economy.
Yeah.
Pockets of opportunity.
There are. If you're looking
at those demographic shifts?
There's those shifts. Exactly.
Okay. This is all great advice for someone building a portfolio.
Yeah.
But what about the everyday homeowner?
Right.
Should they be worried about these long-term trends?
It's always wise to be aware of the broader economic forces.
Yeah.
But remember, property is a long-term investment.
Long-term.
And those who bought their homes years ago, they've likely seen significant appreciation. Even with the ups and downs.
Even with all the craziness.
All the craziness, yeah.
It's about the long game.
Long game, exactly.
No short-term fluctuation.
But they become less significant.
When you're looking at a 10-year horizon.
Exactly.
Okay, let's shift gears a bit.
Okay.
Talk about technology.
Technology, all right.
The U.S. has such a huge influence on that.
It does.
And labor trends.
Labor trends, yeah.
And these policies focused on deregulation, domestic innovation.
Could really accelerate those shifts.
The UK would have to adapt.
The UK's got to adapt.
Potentially new real estate demands.
New demands, yeah.
Related to tech hubs.
Tech hubs.
Flexible workspaces.
Exactly. The rise of remote work.
Remote work, yeah.
The gig economy.
Gig economy. Everyone's talking about it.
All those tech companies needing office space.
Right.
Even if it's not in a traditional city center.
Right. And that actually ties back into Labor's budget.
It does.
Their emphasis on green energy.
Green energy, yeah.
Sustainable infrastructure.
So we could see more opportunities for environmentally conscious developments.
Right.
Buildings designed for energy efficiency, sustainability.
And that appeals to everybody. Investors and tenants.
Yeah, but it's not just about appealing to a certain demographic.
Right.
Sustainable building practices are becoming essential.
From a regulatory standpoint, yeah.
Regulatory investment standpoint.
Okay.
Think about it.
Yeah.
A building with a lower carbon footprint is going to be more valuable in the long run.
Okay, so we've got technology, labor trends, sustainability.
All intertwined.
What about interest rates?
Interest rates.
We talked about the short and medium term.
Yeah.
What's the long-term trajectory?
So after that initial volatility we talked about, we would expect rates to stabilize eventually.
Okay.
But the key is they might settle at a higher average than what we've seen.
In the current cycle.
In the current cycle.
Because of those global inflationary trends.
Exactly. Inflation is a complex beast.
It is.
And global economic policies, including those from the U.S., are going to play a role in shaping that long-term trajectory.
So even if things calm down,
we
shouldn't expect rates to go back to
those historical lows.
Those historical lows we've seen recently.
Yeah.
What does that mean for someone who's planning to buy
in the next few years?
In the next few years, yeah.
It means understanding the implications of fixed versus variable rate mortgages.
Okay, fixed versus variable rate.
Becomes crucial.
Okay.
Locking in a lower fixed rate early on.
Okay.
Anticipating those increases could be beneficial.
Could be really beneficial.
But of course, there's always the chance rates could go down.
Right.
in which case a variable rate might be the better option.
Right.
It's all about weighing those options.
Okay.
Considering your own risk tolerance, getting some expert advice.
Expert advice, always good to have.
Yeah.
It's a long-term game.
It is.
That small difference in interest rates today could have a big impact down the line.
A huge impact over the life of a, let's say, 25-year mortgage.
25 years, yeah.
Yeah, absolutely.
All right, we covered a lot.
We did.
Global economic shifts to technology.
Yeah.
Those all-important interest rates.
The big ones.
Any final thoughts on how to navigate?
How to navigate this long-term landscape.
Yeah, because it can feel overwhelming.
It can.
Trying to make sense of it all.
I understand.
Yeah.
The key takeaway here is that the world is changing.
It is.
The UK property market is evolving right along with it.
Right.
Staying informed, being adaptable, diversifying your approach.
Diversifying.
Those are essential for long-term success.
I love that it's not about predicting the future.
No.
It's about being prepared for the different possibilities.
Exactly.
And having that flexibility to adjust
your strategy as needed.
Exactly. And that's where informed decision-making comes in.
Absolutely.
Understanding the potential impacts of these global trends.
Right.
Aligning your investments with those shifts.
You can position yourself to not just weather the storm.
Weather the storm. Ooh, I like that.
But to actually thrive in this evolving landscape.
Fantastic advice.
Thanks.
Well, folks, there you have it.
Yeah.
Our deep dive into the UK property market.
In the wake of a Trump victory.
We covered it all.
We did.
Short-term volatility to those fascinating long-term trends.
The whole spectrum.
Hopefully you're feeling a bit more equipped to navigate this exciting, albeit complex landscape.
It is a complex one.
It is. Remember, knowledge is power.
Absolutely.
Staying curious is the key.
It is.
To unlocking those hidden opportunities.
Right.
So keep learning, keep exploring, and as always, happy investing.
Happy investing.